Greetings, Dr. Jeffrey Scott. This is my weekend market update. Recently changed the format. I'll do two separate updates. On Friday, I'm doing sort of my perspective on the week that passed and the market and expectations for the following week, and a couple of stocks. And then I'll come back on Sunday and highlight my favorite stock picks. And if you were on last Sunday and took that pick, you could have made some nice returns. We'll talk about that as well. U.S. stocks weathered a storm this week. We had earnings, including Netflix being good numbers, but maybe didn't meet somebody's expectations, selling off over 1%. Economic news, you had CPI, PPI, jobless, employment, not employment, manufacturing. We had Trump allegedly saying he's going to fire Powell. The market sold off. He came on and said he's going to keep Powell. A lot of craziness this week. Soft on Friday into the close, but overall the market's finished up on the week, at least mostly up on the week, and we'll take a look at all that in just a few minutes. Again, my name is Jeffrey Scott. MarketMRIPro@gmail.com is my email address, and my Google group is called Top Down Trader. Volume on Friday, even though it was options expiration, doesn't look like it was excessive at all, which is probably good. Summer day, you wouldn't expect a lot of volume. Educational purposes only. Anything I recommend should be taken in the spirit of education, not investment advice. The intent of this video and all my videos is to demonstrate how I use the tools of top-down analysis, how I apply them to my daily trading. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. And I have tools in multiple platforms, but am an independent trader. All right. If you're looking for my wealth charts video, it'll be out Monday morning before the market opens at stocksanddocs.com. Speaking of such, I'm going to be doing a live meeting on October 27th and 28th. My wife will be scouting locations. I've already got a couple that we can use, so this is going to happen. Cost is $12.50. It includes breakfast and lunch on Sunday and Monday, catered dinner cruise on Stocks and Docks, my boat Sunday evening, weather permitting. If not, we'll go out as historically to a nice steak dinner. People like going on the boat, and if the weather allows, October is not a bad time to go out. 2 packed days of education and software instruction back-to-back with John Person's seminar, which he's holding October 25th and 26th. Separate fee, overlap in style, different approaches would be, it's a great 4 days if you can take all 4 days. And I'll be hanging out at John's meeting on the 26th. I'm speaking at a healthcare conference on the 25th, so I can't make both days. For more information about either, just contact me at MarketMRIPro@gmail.com. My Google group, which I mentioned, that's where I do most of my communication. I hold special training events for the people in the group. I don't always post everything on YouTube, and it's free. I give you discounts. Why not join? You can quit anytime. I always start with, is there a recession in our future? There always is, just probably not this week or anytime soon. You can see we have crossed back above the zero line on both the 10-3 months, 10-2 yield curves, and recessions occur sometime after you cross over. So I still think we'll have a recession. We always eventually will. I don't think we're anywhere close. I think that's good, because those of us that follow the markets know that recessions and bear markets, tough times to be long. If you look at the measurement here of credit tightness, we don't see any. It spikes during times of recessions. And the Philadelphia Fed diffusion, I think it's surprised to the upside at 15.9, which just says manufacturing is holding up quite well. So we don't have stag, but we have inflation. But the CPI and PPI I thought were reassuring. And the question still remains, what's going to be the impact of tariffs? And we've got a Fed meeting coming up, not this week, but next. It'll be interesting to see how they respond to the data. This will be an easier week for data. We've got leading economic indicators on Monday, Tuesday, Powell gives remarks at a banking conference. Home sales on Wednesday, jobless on Thursday, and PMIs. And then Friday, durable goods. Yeah, so all that matters, but compared to this week, it's a quiet week, but not quiet over here on the right. You have something for everybody on earnings. And as it says in the lower right-hand corner, it is a judgment call to hold stocks over earnings date. It is bad judgment to not know when your stock's earnings date is scheduled. And then the index we put together over in June in Orange County at the last seminar that I did talked about the leaders index. You make a list index of leaders. When that breaks down, you get worried about the market. We're already late in this move, probably around here when we put this together. We actually broke out yesterday, and then on Friday we gave back a little bit, but really less than a half, less 0.6% down. We're still right off all-time highs on this index. It has not broken is the bottom line. All right, off to the charts. We already talked about my Google group. And Palm Beach is beautiful. We've had meetings at this hotel. I'm going to be checking that out Monday. I just won't do it if the rates are too expensive. I want it to be reasonable. This hotel, which is on the beach in Singer Islands, 5 minutes from where the hotel we're likely to use, which is a lot more affordable. All right, I like to start here and look at how the market did. And let's look at 5 days because it's Friday. So let's look at the week we just finished. I said we were mostly higher. Let's see what that means. It means that the Qs were up 1.27 on the week. The dollar was up 0.73, Spiders 0.64, Russell 0.28. The only index down on the week was the diamonds, and they turned negative today for the week, down 0.06. VIX was down, or volatility was down, and Bitcoin took a breather this week. If we look at what happened in the markets today, Friday, we can see that it was a down day across the board. Spiders led, and they were still down 0.07, Q's down 0.1, dollar down a bit, 0.15, diamonds 0.44, Russell down 0.72, Bitcoin down 1.43, and the volatility was also down. Interesting to see everything down. And when you look at the indexes there, except for the dollar here, everything was well off of its highs. From a new high minus new low perspective, looking at the NYSE and the NASDAQ and concentrating at 12 months, still holding a decent number. That's bullish. If we look at one-day change on the sectors, utilities, discretionary, real estate were the top three. Materials slightly positive. Energy, healthcare, communications, and staples brought off the bottom. It's kind of a confusing week, perhaps. From the perspective that you've got some of the defensive plays up top, like utilities and real estate, and you've got staples and healthcare on the bottom. I think a lot of it was driven by stocks like LEU, and uranium and some of the utilities and electrical generation that I think are powering the utilities differently than perhaps previous cycles. If we look down here, clean tech, lithium, K-Web, so China Internet, MLPs, uranium, China discretionary, cloud, e-commerce, metals mining, Southeast Asia, cybersecurity. So still pretty heavy in growth-related issues at the top. If we look at a 5-day change out of curiosity, the losers were energy, healthcare, and materials, and the winners were tech, utilities, industrials, finance. And again, utilities is typically more of a defensive play, but I think with the data centers and the electrical generations, companies like I think LEU and the uranium play, I think it's considered utility. We'll have to look at that. But there's a lot of utilities, CEG, that are involved in supporting the nuclear and electrical power. If we look here, we have three major indexes. Percentage of sectors up compared to the prior day, less. Industries compared to the prior day, less. And then how many stocks were up? 36%, 35%, and 38%. Not horrible, but the majority of stocks were down. And if you got a broad-based portfolio, you were probably down a bit on Friday, but up on the week. If we look at the timing model, not a lot happened today. We looked at Thursdays and said, are we breaking out here? Well, Friday opened higher, set all-time intraday highs, and pulled back. This is the Spider Daily, the Q Daily. the Russell daily, and the Dow. Really a negative day, but not such a big deal. Nothing changed on either the buy sell indicator, still a buy. We did lose our daily bongo, turn bearish on the Russell and the diamonds, but as long as we stay above the WMA, the dailies are all in a buy. If we look at the weekly, they're all in a buy as well, and you can see when it makes a change. We have a lot of years of data, so when I switch from daily to weekly on an index, it takes a little bit of time, but you could see touching all-time highs on the weekly spiders and Qs, the diamonds in a flag, and sort of a consolidation as well on the Russell, and the buy-sell remains long. If we look at the index ETFs to dive deeper into the markets, and we're looking here at daily charts, but you know what, on Friday I like to look at weekly charts. So let's just call up the weeklies. And let's take a look and see what we have. So weekly on the spiders, you can see technically it's a high close doji. We had a little pullback into a doji. We closed above the height of that doji today. That's a bullish signal, up 0.64 on the week. Consolidating at all-time highs can't be a bearish thing. Seasonality, we're going to get into a little bit of a quieting range, and then typically we run up into the end of the year, which occurs even later. So we'll be watching the spider. I think it goes higher, but a pullback to support. We're about to get the golden cross on the weekly. So pulling back into this range here would not be shocking or mean this rally is over. Don't think it's going to happen anytime soon, though. The weekly Qs, taking a look at them. Another powerful week, setting an all-time weekly high as well. 1.27 on the week. And you can see seasonality is positive over the next couple of weeks, maybe a little dip in here. So Qs look to me, again, like the spiders, why not go higher? Again, look at the weekly diamonds. Just remind everybody we're looking at weekly charts, and I'll have to remember to make them daily again. But we have not set an all-time high on the weekly diamonds. I think when we break above this line and this line, it'll be interesting. Certainly could pull back to the 50. Hopefully the 17 will cross over the 50 soon, and you can see seasonality is still okay on the weekly diamonds. And the diamonds were down this week just a bit, 0.06 with a bit of a hammer. If we look at the Russell 2000, they have been the laggard over the longest period of time, nowhere close to all-time highs, but they did break above the 200, they broke above the 50, and they're holding here maybe a few weeks of sideways to down before seasonality comes back into the Russell. On the week, they were up a little bit, 2 dojis in a row, 0.28. If we look at the volatility index on the week, looking at VIX futures here, what do you see? You see it was up 0.49, which really for this is very flat, not much of a move. This is what a move looks like. And then lastly, if we take a look at the US dollar, which on the daily charts had broken out, on the weekly charts you can see the same breakout. Clean breakout, finished significantly higher, 0.74%. Now the dollar is so far down off of its highs. All my friends who are in Europe, when John was over here tonight and was recently in Europe, all talk, my son's in Europe now, about how weak the dollar is over there. And as you can see here, the dollar is bouncing off of a low, but it's still pretty low. Quick look at commodities. Gold is consolidating off of the all-time highs. It opened higher, closed lower, but was still up on the day, 0.26. Silver opened higher, closed lower, and you can see silver, though, is down 0.12. The dollar opened up high and actually closed down a little bit. On the session was down 0.30. Natural gas, when it gets back above the 200, I'll care. And then if we look at some of the, let's make this 100 bars, the interest rates, we could see that the 10-year was down a bit, 0.67. The 30-year was down a bit, but it still closed in the 2.26, but it still closed right at 5%. And I think 5% is an important number. If it goes much above 5, I think the market is not going to be happy. Buckets, kind of a neutral stance. We shifted to the left. We came off the highs that we had on Thursday. We put some stocks down at the bottom today, but no signal there. Market breadth. NYSE perhaps is flagging here, tried to break out and failed. NASDAQ Composite set an all-time daily high today, but came back. Still looks like close to, if not a closing high. Let's see. Close there was 28.95.66, 28.84, so new all-time closing high. Down here, there's not a whole lot to say. The new high, new low, or stocks above the 20 in green, 50 in white, red and 200, drifted down a bit as they on both the NYSE and the NASDAQ. We have the new high, new lows are green, but the advanced decline lines are red and the volumes are mixed. And no new signals down here. And on the market breadth with the 13-week high-low, here we have the spider, NASDAQ Composite, S&P 1500, and the Russell 2000. And I look at a couple of things. We had talked about RSI divergence at the highs, and we saw some, we expect perhaps could see some more weakness here, but we've come off the high on the 13-week new high-low on all of them. So if I put it all together, the markets continue to hold up remarkably well. We've got some big things coming. We got Fed meeting in a week from Wednesday. Still have to worry about tariff tantrums. Lots of news driving this market, and we got buku earnings coming up. So I think there's a lot of things that can move the market, but the market is pretty resilient here, and I don't think it looks any different from that perspective. At some point, it's going to stop going up. Just don't think it's happening yet. If we look at Bitcoin versus the spider, it came down some today. If we look here at the S&P sectors versus the various versus the spider, what do we see? Discretionary picked up some today, as did communications, as did financials. Industrials remain pretty strong. The defensive things of staples and real estate and healthcare weak. Tech is the strongest, and utilities are responding. And it's probably has a lot to do with data centers and the need for electrical energy and the companies that are really gearing up to support that. Let's go back now to the JAS layout. I guess Lou counts as an energy. Congrats to those that watched Sunday and took my pick, 1, 2, 3, 4, 5. We looked at options that were at 200. The stock was about $206. We looked at options calls at 200 that were 26. And since I have them, I can just tell you what they ended up doing. And I've already taken some profits, which I talked about on my daily videos. But the stock went from 206 to 249 this week, up $15 today alone. And those $26 calls are $57. Hopefully you sold some and took profits. Hey, take your profits, come to my meeting in Palm Beach. It's worth it. You'll get more. I don't know if I guarantee more like that, but we'll do our best. If we go the top down side and look at my universe, sorry about that, I want to take a quick sip of water. And we look by one-day response. Now this is going to look different than the S&P 1500 because if I click this, you can see I've got 3,750 stocks in my universe. Each one is put into a sector. So we got utilities, energy, and cyclicals. So the discretionary were the leaders here. Interestingly, healthcare again led to the downside. Just look at Elevance, ELV, if you want to see why. Communications, staples. All right, let's take the top three and let's rank the industry groups by percent. And let's take, there's your independent power producers. And these are a lot of the companies that are working with the data centers. No surprise they're top. Here's uranium 2, renewable utilities 3, 4, 5, 6, 7, 8, 9, and 10. Those 10 industry groups have 215 stocks in it, so the leading industries and the top sectors. Let's put a $5 rather, and a $500,000 filter, hit OK. I'm left with 140. Let's look at some of the big movers to start. SRM, anything up 50% on a cheap stock. Don't know anything about it. I think we looked at it one day this week. Big run up, flag, breakout. Yeah, it's great if you knew about it. I don't know this company. There's no fundamentals on it. SRM rebrands to Tron, adopts Tron. Don't even know what. SRM Entertainment. All right, whatever. Beautiful move. Nice if you knew about Talent Energy. Is this Talent? Yeah, we talked about this several times over the last couple of weeks. Pull back to the 50 and a big move up. I don't know if there was earnings. Gosh. Major acquisition of 2 natural gas power plants. FLNC, cheap stock. BYON, Beyond Inc., the old Beyond Beef. Remember when this was a hot company? I mean, $100 stock. Ooh, they'd announced McDonald's, stuff like that. Well, now you look at it, you had a nice breakout here. Nice orderly uptrend. I don't count extensions. It's right by the moving average. Relative strength and OBV look okay. SMR, one of those smaller nuclear reactors, kind of looks a lot like Lou, doesn't it? Big breakout there. That looks great. Is it too far? It's up to you. Hess Midstream, this is one of the MLPs. I like this group because a lot of them pay a dividend. This one pays a dividend of 7.14%. I've been in ET forever, enjoying the dividend. LEU is another stock in the uranium space. Great seasonality, great move. It's extended. I could not recommend this right now to anybody. In fact, I already mentioned I took some profits. That said, no one says it can't go significantly higher. VST is one of those energy companies supplying data centers, little pullback and a breakout. LNG, Kramer talked about this one today. Liquid natural gas, nice breakout here. Had an EMS change, a CPR, gap volume, breakout momentum out of a squeeze, relative strength and OBV picking up. A lot to love there. Solar Edge, the solar stocks are tough. This one actually has moved up. Fun is that Six Flags. CEG is another one of those electrical generation utilities that look so good. That's one way I'll look at it. Another thing I'll do is I'll look at momentum, short-term momentum here. And CEG comes up to the top, followed by VST, two things that we like. HESM, Midstream, MLP, and GEV. Boy, whew, this is one that you almost got to wait till it goes sideways, hits the 50 and bounces to buy. Sideways hits the 50 and bounces is when it hit the 17. What a run. I don't know how you could buy this up here if you don't have some. A lot of the excitement had to do with the growth and surprise in the last earnings. $1.64 goes against 71, so it's still more than 100% growth. The revenue growth is going to be in the 10% range. We'll see if you have any surprises. NRG, like SMR, one of the nuclear reactors, I believe. NRG, certainly energy company. Alibaba, Chinese discretionary, breaking out here after a pretty significant pullback. It's an ADR. It's always going to be kind of gappy. TRGP, I thought this was an MLP. Another energy. SMR we talked about before. One of the stocks that I'm in is SE. This has been a great mover going back quite some time. It just continues. It probably makes a run on its all-time highs. If solar is starting to break out, you're going to see First Solar. It's just been tough to hold this stock. OKE, another of the MLPs, 3% dividend. OKLO, another one of these utility stocks. So you can go down the list. That's the second way. And another way might be to add pullbacks and uptrend filter here, hit OK, and then rank them by the number of up dots. So Talon we looked at before, LNG we looked at before, SRM, eBay. Wow, eBay's a growth stock again. Look at that, breaking out here with lots of blue dots. So I always start this way to look at from a top-down perspective. And then after I finish that, I'll probably go, let me just kill all this stuff, and I'll pick something else. Let's go look at the FANG stocks. Let's take off the filters, please. And very quickly, let's just see what we got. Amazon. Talked about Amazon last week as looking like it was at a decent buy point. Earnings are July 31st, $1.31, yeah, versus $1.26. Mediocre growth. 15,566 versus 14,797. But it's a sandbag. You can see the surprises almost every time. So Amazon looks okay. APP is selling off a little bit after hours because it did not get named to the S&P 1500. Running right up the S&P, the 50-day. This has been a great performer. Google last week looked like it was ready to buy when it took out this line. It has, probably still attractive. Meta. Come on, Mr. Meta. Oh, Microsoft, wow. Meta, hammer here after a little pullback, may not get back to the 50. This might be one that looks like it's interesting and it may be something to start. Whoops, didn't want to do that. I wanted to do this. I mean, somewhere in here, this is going to become attractive. Microsoft is another wow. Netflix, interesting. And is this a foreboding of what's to happen? Netflix took out that little trend line on the flag here pre-earnings and sold off pretty hard, even though the earnings were 47% growth rate and a surprise, 16% revenue and a surprise. I think it had to do with their comments about margin and cost of content. And Tesla's got earnings this week. And Tesla, I mean, if you're a Teslonian and you want to own Tesla, you've got a nice setup here sitting on top of the moving averages. Seasonality here, not bad. So Tesla, again, I'm not one of them, but I own the car, and except for the fact it was kind of like a nice golf cart when it came to the insides, and I had an early one. I'm sure they're a lot nicer now. Tesla is, I love my Tesla. I just didn't like the inside. But Tesla is setting up, and it has earnings this week. We can see up here it's on the 23rd. And then I'll go into my larger list, which I call the impulse list, and I'll run a couple of scans like we just did. One I like to do is that pullback and uptrend, $5, 500,000, hit OK, and rank them here by the dots and see if anything that we haven't looked at is here. Here's Talon, LNG, CRISPR. Biotech's having a rough time. Gene therapy took a hit this week with Sarepta. This thing's breaking out. It's not because of earnings. It's one of those story stocks. There's not even a lot of revenue. It does great things. It's just a hard stock for me to own. Here's SRM. Schwab getting to all-time highs. I think it's all-time highs. Certainly the highest it's been in all long. Yeah, it probably is all-time highs if it took out that prior high. But Schwab, the current home of Thinkorswim. Regions Finance RF probably had earnings. Yep, earnings with a significant beat, although revenue was soft. Pinterest, I've always wondered how they make money. Fastly, yeah. eBay looked good. Net looks great, Cloudflare, but at some point, when is it too expensive? You can see the earnings per share growth have definitely slowed down. So this is finding those stocks that really moved today because I'm looking at my impulse dots. Another thing I like to do is to find my secret weapon.